All right. Good afternoon, everyone. Thank you all so much for joining us during your lunch breaks and such. Today, we have a special guest, and we are still talking about taxes, as we do know it is tax season. All right. And of course, what other type of person would you talk to outside of a licensed and certified CPA? All right. So, of course, for today, we were actually graced to have one of the best people that I know in the industry to share with you guys some small business tax tips, right? As well as some common mistakes that a lot of small business owners make as well. But before we dive into that so deeply, first, I would like to thank our guest speaker for taking out her time away from her family, her clients, and what she does on a day-to-day basis to give you guys this insight. So without any further ado, I would like to introduce you all to Miss Diamond Gardner. How are you, Diamond today?
I am doing well. Thanks for having me.
Awesome, awesome. So tell us a little bit about yourself. How did you find yourself in the tax industry?
I studied accounting in undergrad. So as far as college, I went straight to accounting. In undergrad, I really gravitated to the tax courses. So
Mhm.
after undergrad, I went straight into my master's to get a master's focused in taxation. So after that, I started working at a large public accounting firm for about 4.5 years. And then
Mhm.
I went to a smaller, still public accounting firm in the Chicagoland area. And then I said, I think it's time now. I think I have enough corporate experience under my belt to start my own practice. So I started Shine Bright CPA, where I help individuals and small businesses do their taxes and do tax planning and bookkeeping for them. And I also teach a lot of financial education workshops.
Awesome. Awesome. Everyone always gravitates towards the money talk, right? And I'm sure there was a lot of training and classes to take, all that type of stuff to be in your position. So we are grateful for people like you, but we only appreciate people like you, and especially between January and April. But at the same time, people use CPAs throughout the year, though, right?
Correct. Yeah, I have some clients that I talk to throughout the year, especially some of my business clients. They will keep communication throughout the year because they have questions maybe of what they want to do, if they're
Yeah.
trying to do a huge purchase, or because I'm doing their bookkeeping for them. Because I found that a lot of them, that's a little difficult for them to keep up with the bookkeeping and other things behind the scenes. They want to just run the business, they don't necessarily want to deal with that. So I've been helping them with that. So I really do like if I talk to them throughout the year. So when we come to January, it's not like a big shocker, like, oh, you just did this, or what have you done, right? So, so it's really good if you can keep in communication with your CPA or your accountant throughout the year, so they kind of know what's going on with you and your business.
Awesome. Awesome. That's good to know. And that's the thing. I think a lot of people go from, having a small business idea, then it becomes like, a hobby, something they kind of do spare
Mhm.
time sometimes. And then before you know, when they start putting, the right plan together, the right structure, put some action behind certain things, then they start, turning into something else. And then before you know it, they need someone like you throughout the year. So what are some small business tax tips that you wanted to go ahead and share with our audience today?
So I want to let's go talk about some of the common mistakes I see for small businesses, right? When you first started out, you just had, you like, okay, I'm selling my products or my services, but you're really not thinking about the tax ramifications of what you're doing or even keeping track of that. So I see a lot of people, if you're not getting like a EIN from the IRS, right? That should be like one of the first things when you incorporate your business, making sure you get your EIN. Outside of that, a lot of people may have an EIN. I ask a client, do you have an EIN? They say, yes, they do. But they're very confused on the structure of their business, right? So they know they may have an LLC, or that's what they had. They had registered it with the states, but they really don't know for tax purposes what exactly that means or what actual tax return they should be filing. So your structure of your business is very important to understand, right? Because if you're an LLC, you can be filing a numerous of tax returns. So you need to understand your structure, right? If you're a single member LLC, you are disregarded for tax purposes and it should be reported on your Schedule C of your 1040. But let's just say you and a friend went into business together, that would be a 1065, which is a partnership return. And
Mm,
outside of that, for a LLC, if you made an election to be an S corp, because a lot of people say, "Oh, I'm an S corp." I get this a lot from clients. "Oh, I'm an S corp," and I say, "Well, did you make the election?" And they're like, "Well, I had somebody do all my business stuff," so they assume that they are an S
mm.
corp. But that is the election you make with the IRS. So you need to know that. And if you're an LLC, you can also make an election to be a C Corp. So really knowing and understanding your business structure is going to be important, because what I have seen is clients have came to me, their business has been established. They tell me to do the taxes. I do the taxes. They tell me they're S Corp. And then they call me months later and say, "I just got a letter from the IRS and I don't understand it." And the IRS is pretty much saying you were a C Corp and you filed the incorrect tax return because you didn't make the proper election. So, like, it's very important. So, if you don't know what structure you are, the first thing you should do is look at the document. The letter that IRS gives you when you get your EIN is going to tell you in there. It tells you what tax return based on what you selected, you have to file. And then it'll tell you about any others when it comes to, like, if you make an election, other tax structures you can go into if you make the proper elections to do so.
Wow, man, that's a mouthful already. But that's very important. Understanding the structure, and of course, there's a lot of different structures that are out there, and of course, from not knowing that type of stuff, again,
Mhm.
most people don't even have that conversation until their business is either made a certain type of revenue, or unless they're putting together the structure for their business for the first time.
Correct.
And then, of course, that's when people want to know the differences between having an LLC, having a S corp, having a C corp. What's the benefits? What's the pros? What's the cons? Things of that sort. So of course, that's why you need to talk to a CPA. But we'll swing back around to that. What's some other small business tax tips, or is that what you have for us?
So some more is not reporting all of your income. So some people think that they can get away with, like, "Oh, I'm not going to report." So let's just say you're doing credit and cash sales, and they may think, "Oh, I'm not going to report all of my income because I don't want to pay as much in taxes." They do have ways that they can audit you if they feel like your income is not reasonable for your business. And they have audited. So for example, the IRS, if you're a barbershop and you're located maybe 2 blocks or a block from another barbershop, and their income is significantly higher, they will increase your income to that limit, even if you reported something lower on your tax return. Because what they're going to look at when they audit you is, what does their lifestyle reflect, right? They told me they made $10,000, but they just purchased a home. They have a
Mm,
home and a new car, right? So that
mhm.
doesn't equate if you're telling me you had a loss this year or you only made $10,000. So you need to make sure that you report all of your income and know what to deduct in your tax return, right? So, like, it's a lot of expenses that you can deduct, but it's some things that you can't deduct. Like, so any government fines, for instance, you're not able to deduct them. So a parking ticket, even that car, if that car is for business and you were out for business and you received a ticket, that's non-deductible, right?
Mm.
Only 50% of your meals are deductible. Currently, in the new tax law, you're not able to deduct any entertainment. So if you're going to take a client out to a Bulls game, that would be not deductible as of right now. And in
Gotcha.
the past, that was deductible, right? A lot of people used to write off a lot of things when it comes to entertainment, especially big businesses.
Got you. Got you. That's good to know. And since you're on that subject, a lot of times people make that same mistake when they're going into home ownership as
Mhm.
well. And we get it. As small business owners, people don't report a lot of their income simply because they don't want to pay a certain amount of tax on it, right? However, that ends up putting you in a bad position, depending on, when you filed those taxes and when you're trying to purchase property, because they look at that, to determine your buying power, your pre-approval. However, if you do have a tax liability, as long as you either pay that in full or get on a payment plan for at least 3 months, you can qualify. But a lot of people don't end up qualifying simply because of what Diamond just mentioned, that they're not reporting all of their business income. And I mean, I'm even going to kind of edit that. Even if you don't report all, at least I would say at least report most of it, right, Diamond?
Well,
Never mind. Never mind. I'm my bad. You the tax professional. Let me shut up. So I know there's always a thin line, with stuff like that. So never mind. I'll move on. We ain't mess up your
you
life.
should you should report all of your income, all of your
Yeah.
income that you're receiving from, goods or services that you're providing to people. We'll keep that at that.
There we go. See, that's why people are licensed and in certain things. So listen to the professional. Don't be listening to me on taxes, okay? But that's good. That's good to know, because a lot of people, I get it. A lot of times people, they think certain things, but then they get upset when they don't qualify for certain things, or when they try to get a certain type of business grant or whatever the case may be, because everybody on, like, especially like on social media, everyone say, oh yeah, my company's doing this, my company's doing that. But when it's time to file taxes, it's a completely different story. So,
Mhm.
but okay, so that's good to know. And then, so now, any other small business tax tips or common mistakes that you see?
And I would say record keeping is a big one, right? So I see a lot of clients that don't keep good records or don't have any records at all. So you really need to keep your receipts, cancel checks, receipts of whatever your expenses for the business, and also your income, right? So you need to kind of keep track of that, because if they ever come back, you're going to have to actually show proof that these are actually deductions that you had, and this is actually the income you made during the year. And I guess one other would be not paying taxes during the year, right? So
Mhm.
you're supposed to pay quarterly taxes if you're a business owner, typically throughout the year. And a lot of individuals I see, even my clients, they choose not to do that. And some of them make significant money, over six figures, and they can have a healthy tax bill at the end of the year that they weren't thinking about.
Mm. Got you. Okay, got you. Okay. And then now, if a person wanted to pay taxes, let's say throughout the year, how would they do something like that? They just like, do they have to work with a CPA? Which, by the way, let me pause real quick. Can you guys just go ahead and share your favorite emoji or give us some thumbs up inside of the chat? Let us know if this information is good so far. Especially if you're taking notes, guys. This is the type of information that you need to take your business to the next level. A lot of times people think it's always about revenue, but it's also about protecting what you have, right? So make sure you guys are doing that. Now, going back into this particular tip that you just gave out, or common mistake, I should say, not paying taxes throughout the year. What options does a person have to do that? How can they do that?
So you're supposed to pay quarterly taxes. So if you don't know, really honestly, each quarter, and those quarters for the IRS is different than what we would think of a calendar quarter of each 3 months. Some of them are 2 months due date, some of them are 3 months. But what you're supposed to do is calculate what that taxable income will be during that time frame, and then pay the estimated taxes on it. So if you can't do that, you're supposed to use your prior year tax liability and pay estimated taxes. So if you're going to a preparer, some preparers can provide you with an estimated schedule if you have taxes due throughout the year, right? So at the end of the year with your tax return, you can maybe request it if you don't want to calculate it yourself throughout the year, and say, can I get the estimated projections of what I should be paying in taxes from previous years so I won't get in trouble this year? But it's very important for you to do that, because if you're paying your taxes and you are a business owner, when you file by April 15th, they're already late, right? So the last quarter of taxes for this year should be filed by like January 15th. So that's 2 weeks, right? Like 2 days, right? So
Mhm.
we should have the IRS, in actuality, should have all of your taxes for 2021 already or within 2 days. And that will only be for quarter 4 that is due in January, right? Because you were supposed to be paying every other quarter. So that's just something to keep in mind because you can rack up a lot of penalties that way.
Awesome. Awesome. Good information to know. And you most definitely don't want to have those penalties things start to add up. You
Mhm.
most definitely don't want to have that. For those who are just joining us, just want to just kind of go through these mistakes if you guys have missed it. So number one, the common mistake number one is not having an EIN for your business. Okay. And then Diamond, how can a person get their EIN? I don't know if we mentioned that.
So a EIN is free, first of all, because I've had clients that have went through different websites and they try to charge you. So the IRS provides EINs for free. So you go on the IRS website to get your EIN for your business. So they're going to ask you how's the business organized and some questions so they can figure out what type of taxes you should be filing based on the information you provided to them. So that's how you will receive your EIN. So I typically tell people if it's a new business, get your EIN after, if you're an LLC, for instance, after the state approves your articles of organization. So
Mm,
that's because you want to make sure that the addresses, the name is exactly what's on that article. And sometimes states can push back and say that they're not going to accept that name. Maybe somebody else is using it. So it makes more sense to me to make you do the articles of organization first and then go on the IRS website and get the EIN number.
got it.
And if
Got
you're
it.
not organized as an LLC, you can also get one if you're a sole proprietor. So, if you're filling out W-9s because you're working or doing different jobs, for individuals, you can get an EIN number based on your business, even if you're not organized. So that's another thing people maybe help.
Gotcha. Okay. Perfect. Perfect. Well, okay. So that was number one. All right. So you guys got that information. And of course, real quick, I'm going to go ahead and put Diamond's information up there for those of you all who are just joining us. Some of you guys, of course, may not want to share, personal tax, certain things, questions, whatever, on a live platform. And we understand that. But of course, if you're ever looking to work directly with, a licensed CPA, that we would recommend would be Diamond, Gardner herself. You guys have her information down there as well, and that is her office line as well as her email address. So you guys got that. I'll be putting that back up there as well too, so I can get everyone that just joined us up to speed. So the other mistake that she mentioned was number two, not reporting all of your business income. She went over the pros and cons of doing that. All right. Common mistake number three, proper reporting and document keeping. Okay, making sure that you have everything in place. And there's a lot of apps and stuff like that, that's available, to kind of help people out there, right, Diamond?
Correct. Yeah, it's a lot of apps. A lot of people are familiar with QuickBooks and like QuickBooks. So a lot of things that you can help track all of that to make it easier on you. Because I know as a business owner, you're busy.
Yeah, absolutely. Absolutely. And last but not least, the most recent one that she shared with you guys is not paying taxes throughout the year. Yes, you can pay those taxes monthly if you're not sure how much to pay. Diamond mentioned paying, an estimate based on what you got, what you did last year. So I think that's, it's something's better than nothing at all. It seems to be the case. So that's always cool. That's always cool. So any additional tips that you wanted to leave with everyone. And by the way, guys, the chat is open. So if you guys got any questions, comments, or concerns, go ahead and put that in the chat. If any of this stuff is helpful, go ahead and drop a thumbs up or a gem or a fire emoji inside the chat. Let us know this information is helpful. We greatly appreciate you all being here for today. But Diamond, anything else you want to share with everyone?
So I will say, like, self-employment taxes is a big thing because outside of income taxes, if you are a business owner and you are, for instance, an LLC that is reported on your Schedule C, or you are something with what the IRS calls a flow-through entity, so that would be a partnership or S corp. That means the profit or the income taxes are going to flow to the individuals that own that business and they're going to pay at an individual level. Self-employment tax is a big thing that you have to pay. And that usually is why the tax bill is so high because you're paying income taxes and self-employment taxes. So you will definitely see an increase in that if you owe. And self-employment taxes for any profit that's over $400.
Wow. Okay. That's
Yeah.
good to know. So that's a good tip, guys. Don't forget about self-employment taxes. And you say that that's separate from your personal taxes, correct?
So it's going to be paid together, but it's going to
Okay.
be additional taxes that's going to be reported on your 1040. So it's going to calculate if you're a business owner and some of those structures is going to calculate income taxes on that profit and also self-employment taxes on the profit the business made.
Wow.
Yeah.
Wow. Man, good information. A lot of good information, today. That I hope you guys are taking advantage of this, taking notes on this. And again, we know that some people, they like to, have a one-on-one conversation or send an email, things of that sort. If you're not sure about what you want to do or, or who you want to work with, of course, Diamond can most definitely help you being a licensed CPA as well. And for those who are just joining us, we've been covering small business tax tips and common mistakes that many small business owners make along the way. All right, so I don't see anyone. I'm sorry, don't see anyone. I do see there are a couple of. I see Diamond has a couple of fans already. Some people most definitely shared some of their emojis, letting us know that they got the information as well. So thank you guys for that and participating and watching us today. Diamond, anything else before we wrap up?
Okay, I got two more things before you wrap
Yeah,
up. I'm
let's
sorry, I
do it.
feel like I talk a lot. So, something that's coming up very soon, okay, for us business owners, if you have independent contractors that worked for you throughout the year and you paid them over $600, you're required to file 1099 for those individuals. Those are due January 31st, okay? So, to get those deductions, if you paid these individuals, you're supposed to file a 1099. So you were supposed to get a W-9 from these individuals. So at the end of the year, you can file that 1099 for them. Make sure that if it is, you do have independent contractors working for you in your business. Make sure you file those by January 31st. And then I guess I'll just do some quick due dates. Okay. So partnership and S corp returns are due March 15th. Okay. March 15th is the due date. Individual and corporate tax returns are due April 15th. And for individuals, the IRS will start accepting individual tax returns this year on January 31st, 24th. I'm sorry, January 24th. They'll start accepting e-files.
Okay, so what I'm going to do, I'm actually going to put all of this in one. That way I can have it down at the bottom for everyone. So let's go over those items and dates again. Individual tax returns. You mentioned that was due by that was the January 15th.
April 15th.
Oh, April 15th. Right, we'd be all messed up if it was due next week. Okay, well, oh, this
No,
actually
that's the estimated tax.
gotcha. Okay, gotcha. All right. So I got individual tax returns due April 15th. And then you also mentioned, let's see here. What else? What other dates that you had? Something in March?
March 15th is partnerships and S corp tax returns. So those are those flow through entities. They're due March 15th.
Okay. So partnership and this is this partnership paperwork or is this partnership taxes?
That is a partnership tax return. Yeah.
Gotcha. Partnership tax returns. Okay.
And S corp tax returns.
Gotcha. Okay. And that is due. Okay. Gotcha. And you said March 15th?
Mm-hmm.
Okay, cool. All right. And it was another one that you mentioned as well, too.
The IRS is going to start accepting e-files on January 24th.
Gotcha. Okay. So IRS accepting e-file January what?
24th.
24th. Got it. Okay.
A little
Sorry,
over.
just make sure I get all these dates right. So many dates up in here. So okay, perfect. All right, so I'm going to put that on the screen for you guys so we can to make it a little bit easier to take some notes. So individual tax returns, guys, is due April 15th. Partnership tax returns due by March 15th. And then, of course, IRS accept the e-file January 24th. All right, so make sure you guys take those dates down, get everything that you need, get that stuff together. All right. And of course, if you need any help with this, Diamond is available to help you guys, with this entire process. And then, of course, right before that, we talked about independent. So anyone that as a small business owner that you've paid, anyone over $600, you should send them a 1099 before the end of this month, correct?
Correct.
Got it. Got it. That's good to know. So I'm assuming like last year, this wasn't, You didn't have to do this last year, or did they change the amount, like the minimum amount or something like that, or what?
No,
As it
you. This is always still a requirement. So that and also W-2s. If you have people that you're paying wages or salaries, theirs is going to be due by the end of the month too. So
got
that is to make sure that they have enough time to actually file their returns.
Gotcha. Awesome. Awesome. Perfect. All right. Anything else, Dom, you want to leave? Because you done left all the good stuff now. So
No, I don't have anything else. I'm always open to help if you guys want to. I know he has my contact information. It's been a pleasure, and happy tax season to everybody. And I hope this is the beginning of the year. So I hope this year brings you everything that you want.
absolutely, absolutely. All right, guys, real quick, I'm gonna go over everything that Diamond shared, just in case you guys missed it or you're just joining us. The first thing we went over, of course, common mistake number one: not having an EINs for your business. Do not pay to get that service, guys. The IRS has a site, the government has a site to get that done. So make sure you guys take care of that the right way. Number two. Not reporting all of your business income. You heard it from a licensed CPA herself to go ahead to make sure that you are reporting all of the business income that your business is making. Okay. Number three, not understanding. I put not understand. Okay, I'm about to edit that. Either way, not understanding your business structure. Okay, so make sure you guys understand. If you are an LLC, S corp, etc., you most definitely want to make sure that you understand your business structure. If you're not sure, sounds like you need to have that conversation with a CPA. Now, that was actually one of the tips. I don't think I numbered that one correctly. But next will be proper reporting and document keeping. Okay, making sure that you keep records of everything that you're doing with your business. As Diamond mentioned, there's a lot of softwares out there that can help with this process, as well as helping with number four, not paying your taxes throughout the year. You can always do it old school, sending them in or whatever the case may be. However, there's a lot of softwares and things of that sort. As Diamond mentioned, QuickBooks is a major help with that as well. Also, she dropped a tip in there. Don't forget about self-employment taxes, guys. So, of course, that's why a lot of that ends up seeming like it's higher, because the company has its own taxes and you as an individual have your taxes as well. Of course, if you have any independent contractors that you paid over $600, you most definitely want to make sure that you get a 1099 out to them before the end of this month. And some important dates to remember as well too: your individual tax returns due April 15th, partnership tax returns due March 15th, and of course IRS are accepting e-files as early as January 24th. So thanks again, Diamond. We greatly appreciate you being here during your lunch break and during everybody else's lunchtime, taking time away from your clients and your family to give us this information. We greatly appreciate you.
Oh, thank you. Thank you for having me.
Absolutely. All right, then, guys, you guys know what to do. If you guys like this video, like it, you want to share it, share it. And as always, be sure to subscribe if you're on YouTube, as we got nothing but great content on the way. We greatly appreciate you all for being here and see you all on the next video. Have a good one.